There are very few Indian corporation that has touched the height that Motherson Group has in the automotive industry. They had stellar performance. They met most of its 5-year plan except the last one. But still, they are coming back with even bigger plans for the next 5 years. They plan to achieve $36 billion of revenue. Today, we are lucky or fortunate to have been joined by father-son duo, Mr. VC Sahgal and Vaman Sahgal. Thank you so much for joining in ETAuto. It's always the moment name Motherson comes and the kind of journey you had, it inspires me from inside. So I just want to understand from you, Mr. Sahgal, what went wrong and what has been the learning from the last 5-year plan that you had. You had always, very high growth plans whenever you draft your 5-year plan. This is for the first time that you missed out. What were the reasons? Because you even achieved or overachieved during the crisis of 2008 and 9. What went wrong this year?
Yeah, right. Thanks, Nabeel. Thanks for having us here. You see, what happened was that we were almost in line till January, February this year. But we got the bad news of China getting into trouble in January, February, if you remember. And that gave us a kind of a sign that, things are going to go wrong globally also. And while that whole pandemic was uh, uh, sort of everywhere in the world, it was going into a problem. We used to have this thing. I think it is important to understand that Motherson has the advantage that we have been able to see the whole pandemic roll out globally. And we were pre warned really in February, March. And what we did was we decided that we would step back and not do the acquisition that were planned. They were on the verge of finishing up, but we decided that it'd be prudent to allow this whole particular thing to pass. And definitely, I think Vaman will also confirm. Now we are actually happier because the whole assets are probably going to be cheaper, though they have more debt. But I think the price wise they will become cheaper. So we don't have a this thing over there, and that is that top line vanity, bottom line sanity, cash in bank reality. So अगर हम लोग जबरदस्ती उसको लेते तो बहुत it could have been problematic. So that's why we decided that we will hold back, and rightfully so, because this pandemic has really shown that we have to be prudent.
It was in that context a blessing that it happened at that time, because it would have been problematic for us if we would have acquired those companies just at the start of the pandemic, and then of course had to struggle with the last 6 months. And our idea is very clear: we will catch up on what we have missed and further double up from there in this next 5 year. I think a lot more of those opportunities have come. Those ones that were on the verge of financial issues have clearly had a lot more issues now since the COVID. So a lot of those things have also come. Also, a lot of private equities, etc., are wanting to exit now that they see some signs of recovery. So in fact, we have even more opportunities than we had before, and we believe that we will close them and not only hit our last target but also double up from there.
So do we see in the next few months how many number of acquisitions or what kind of expansion that comes your way, and how many headlines we can probably get from Motherson Group?
That's a wonderful question. And I think starting January, February, you will start to see a lot of companies which are going to be available because the customers have already told us to be ready. But Vaman, surely I think Jan Feb we can start showing what actually we have missed out and how we catch up on the full target.
No, we're working hard on it. I mean, at the end of the day, it also depends on a deal being made. But from our side, we are putting full effort, and definitely you should see deals around the corner if everything works out from the deal making perspective. We're actively working with the target companies, and we are quite busy.
Of course, you must be busy because can you tell me some of the deals that you were about to close, but you thought otherwise because of the pandemic situation? Are those companies still going to be in consideration? Are they going to be the first few ones? And what kind of size and in terms of investment is going to be pushed there in those, and how much of your top line is going to increase in the first one or two acquisitions that you are going to announce?
Maybe I can start and Papa can support me.
Yeah, yeah,
The,
yeah.
we are bound by non-disclosure agreements, so really can't really talk about these companies because, as you know, if we give you the size and the product, etc., there would be very few companies in the larger size, so you'd be easily be able to point them out. But I think the important thing to understand is that a large chunk of the 36 billion will come from inorganic opportunities. They will add tremendously to our bottom line and top line. It's not just that we're going after the top line like other people are thinking. It has to be a match between the two. These are also led by the customers. All of them are at the customer's behest. So that's exciting for us. And there will be a mixture. There will be small size, there will be medium size, and there will be large size. Because to hit 36 billion, really you need a big mix of the different types of the companies. It won't be one company or two companies that will get us there. I don't know, maybe 5, 10, 15, depending on again which sizes and things that we close. But definitely some large ones, because to hit 36 billion, we would need to have a couple of large ones there as well.
So,
And
so
Vaman, I think basically we have always maintained that the customer, he doesn't see what is the size of the acquisition or something. He has a problem, and we are there to resolve the problem. So we also don't look at the size really. We will go for anyone. If it's 10 million or 1 billion or 5 billion, we don't care. We will go for it in that basis. So it's very difficult to really quantify the size as a methodology for which companies we are going to take.
So you said that there is going to be a cost advantage because the cost has valuation has come down after pandemic. Just want to understand how easy is it going to be for you to renegotiate those company with whom you had already been talking or in advanced stage of discussion that you mentioned. You must have talked about some consideration pricing and all that. Now going back to the table and renegotiating, how is it going to work out for you?
Actually, Nabil, it's not really renegotiation. The company's value has deteriorated because of the government aid that they have got, or some kind of grant they have got, or loans they have got. So that makes the value differential very, very obvious. So there's nothing much that you're actually going to negotiate too much. But yeah, you will have certain nuances for which country that particular thing was. For example, if it was in America, it would be different. If it was Europe, it would be different. If it is Germany, it would be different. If it is Spain or France or whatever, it'll be different. So those are the small nuances that are there because of the country. And we are not very, I don't think there's going to be very huge negotiations or something like that. It's more of a thing, let's go in, let's solve the problem, stabilize the company, and then turn it around. So, Vaman, would you want to add something there?
No, Baba, I think you're right. I think at the end of the day, we're solving the customer's issues. So we have to have their agreement and their blessing. And the deal has to be fair. It has to be a win-win for all the parties. We've always believed in that. We've never believed in taking an opportunistic moment and pulling somebody under the table or something like that.
Yeah.
So we will do what is fair. And like Papa said, if the condition of the company has deteriorated, well, that much then fair price is reduced. Is as per the performance of the company. Some companies have become stronger. Some companies have become worse. So depending on who we are going for the deal with, it will depend on that, and we'll always believe in a fair win-win deal.
Thank you. My next question, you're talking about $36 billion of revenue. That is almost 4x kind of growth from the current revenue or turnover that you have. What kind of investment are you looking at to achieve this kind of revenue?
So, Nabeel, basically two things I would like to put down over there, and love to hear what Vaman thinks about this particular question. I think it's important to understand that there is a restructuring that's going on between Motherson Sumi and Samil, and that particular thing has another 2 3 months to play out. And as that plays out, I think that will open up much more vistas, much more different opportunities for us to raise the funds as the need may be. But Nabil, you know very well that Motherson doesn't go spending crazy money to buy acquisition companies. Most of our companies, we want to spend money after we've taken it over to make it stronger, make the balance sheet stronger, and enable the people to actually come up and really be saviors of that company. So we're not so worried, and I think Vaman will tell you more about how we have lined up virtually different types of money that can be possible for Motherson. And definitely, you've seen that our debt has now come down dramatically. In fact, in the last 20 quarters, our debt is the lowest at the moment. And Vaman, would you like to take it over from there?
Sure.
I'm not wrong, your debt is about 10,000 crore right now, right?
No, I think the net, this thing is probably sitting about 7,000 something.
That's
But
correct. 7,500 approximate.
we also have cash of 3,000 crores, Nabil, just in case there's a company to take over.
Yeah, I think Nabil, you have to understand that we don't fix a number in mind and then say, okay, this is the money that we have, and now we need to go and only buy what fits in this money. We are solution providers to the customer. So if it's a $5 billion acquisition, then we have to figure out how much money it will take to acquire that 5 billion. If it's a 1 million acquisition and we can fund it internally without even thinking about it, we'll do that. So it really depends on the opportunity that comes. Of course, equity is the most dear to Papa and me. So that'll probably be the last resort. But even there, I mean, if you look at the PKC acquisition that we did a QIP because we didn't want the debt levels to reach something absurd or something like that. And as a family, we're very happy with that 2.5 times net debt to EBITDA, and we don't want to cross that. Also, the other thing important to note is that in the last 5-year plan, we have set up 41 new greenfield and brownfield plants. All of them have stabilized. All of them are doing well. They are growing. They should throw up a ton of cash for us to use again for further acquisitions. And our rating is very strong. We've raised bonds at record levels for our company. So it's a very good situation for us because all the greenfields, all the new investments that we have made in the last 5-year period are all going to show good returns, and the company will be able to use that capital to go after these acquisitions. And where we need to take debt, or in last case scenario, dilute our equity, we're completely open and flexible to that. We have to solve the customer's problem and get that opportunity home, and that's what we will do.
Of course, certainly that I understand. But still, you must have earmarked some investment, like annual investment. This much I'm going to make.
Yeah.
Annually. You were already investing. Is that going to change some way as you are going to target such a huge, uh, revenue that is there?
Vaman, let me take that. I think, Nabil, you're referring to some kind of a cash which is lying with us. I told you approximately we have about 3,000 crores in different companies and different places lying around. But I think what is important to answer your question is, we are a ROS company. A return on capital employed is very important. So the more cash we are sitting on, the worse our roast becomes. So, that's the reason why we are trying to say that depending upon the opportunity, that's the time when we will decide how much of our own money and how much of money we have to take from the banks or whichever way. So I think the new assets that are now, willing to put money into your this thing is something which is very interesting because today most of the countries have negative interest rates. So there are new classes of funding which is available that Motherson is already used and also will use in the further cases. So I think it will depend upon the opportunity.
Some reports suggest that you will list another entity from the group. Is it correct?
No, I can confirm that we will not yet. But there are two. I'm assuming that you know the two. One is the domestic wiring harness company will become one, and one is a new SAML. So other than these two, I don't have any plans as of now to list a third one.
Coming to a very interesting change that I have heard in Motherson Sumi is that you are planning to take over 25% of your revenue from non-automotive. You initially started acquiring a lot of startups in the healthcare and other space. So can you give us a sense why you are going? Traditionally, you did not have very excitement about going beyond automotive. Now you are talking very aggressively about 25%. It's not a small share. So how do you see that?
So, Nabeel, I'll give you a bit of a background and then Vaman will take this question because that's his favorite subject. Uh, uh, you know, uh, in 2015, when we were making our 5-year plan and we had set the target to go to 18 billion, uh, we would then have become probably in the top 10, 12 auto anchors in the world. So definitely we had, in the last 5 years, we have been putting seed money into different this thing over there, which Vaman will just explain to you. But it was clear in 2015 itself that this 5-year plan, we will be 99% automotive. And we say jokingly in Motherson, we say one for fun. 1% was for fun or new areas where we wanted to go. But Vaman, take that and introduce the 4 new verticals to
No,
Nabeel.
Nabeel, I think first important thing to realize it is that we're not going to take some wild bets into the unknown or something. So when we say a new vertical that Motherson will go into, for example, healthcare, it's of making again healthcare products out of plastics, electronics, which we have a capability in, which we've shown to the customers how strong we are. Global supply chain solutions, being able to make again products of very high quality and being able to give them to customers worldwide. The same strength that we use in automotive, we want to bring to the healthcare industry by manufacturing those devices as well. Similarly, in aerospace, again, we have a lot of strength in metal manufacturing, plastics manufacturing. So we want to bring that again, good engineering capabilities, global supply chain solutions, operational excellence, and using the financial discipline that we have built in the other automotive side, we want to bring it to these sectors as well. So, aerospace, healthcare, logistics, IT, these are the 4 things that we have used. We have our own IT company, almost 2,000 design and software engineers that are supporting our group worldwide. Why not bring it more into the outside group as well? Historically, they've only been focused on Motherson Group, developed some fantastic products. Actually, they're a backbone of our company. The reason we are so successful with our acquisitions is because our IT company comes into those acquisition companies and immediately gives us the data that we need to devise the strategies to turn them around and to do very well. So these are all things that we have mastered over so many years. In this last few years, we've got teams, experienced personnel in all these verticals to come in, start seeding these new verticals, bring in other experienced management people as well that can help us to grow. And that's how we're systematically going about it. Gone to customers in these industries, shown them our capability, what we have built in the automotive, and they are extremely ecstatic seeing the good quality and the name that we have built, and they want those solutions in their industries as well. And having a geographical footprint in 41 countries and being able to give them a solution like that is something that is very exciting for them. So we are quite also charged up. I think yes, it is an ambitious target, but we have a good shot at hitting it.
We are almost 7-8 months away from the COVID strike us. I just want to understand how the experience has been. What are the areas you worked upon? What has been the learning? If you could share some.
I think with the grace of God, Nabeel bhai, the big thing that Motherson has learned is that, being in 41 countries, as this particular problem happened in China and the kind of measures that they were taken, we were that much more knowledgeable. We could understand that we can bring all those particular things as required. So basically, the kind of learning that was happening because of this particular phenomena of being in 41 countries around the globe, in March, China actually was not having enough masks. So we exported 150,000 masks from Dubai to China. And then every step that the Chinese government took to allow the opening up of the factories, we could actually see that replaying all over the world. virtually from China, it went to India, to Europe, to America. We could see the whole thing opening out, playing out as if it was a replay that was happening. So I think that was a huge experience, a huge learning. We could actually predict what all would be required. Our own factories were doing a lot of work for the medical people, making masks, making shields, and I don't know what all they did. It's unbelievable. So I think it was a phenomenal learning, but uh, we also realized that we are very good in the speed of adaptability. We were very good with that. So I think that is something that I'm encouraging Vaman and all the other team members. The adaptation, how quickly can you adapt, is something which Motherson did a phenomenal job. The speed with which we came back. Do you know every single associate in our group, about 140,000 of them, we have their mobile numbers, and we established a communication system so that they didn't have to go to the bus stand and then come back home or something like that. We could adapt how many people are required, which plant, where it is required. So the HR people did a wonderful job of making sure that we stayed safe and things like that. So today, almost what 90% of our plants are running plus 85% capacity. So it was a phenomenal learning, but we learned that cash is most important. When the first 2.5, 3 months came, we realized that our sales was zero, our profit and loss was huge losses, but we didn't in any way ask our people to leave or anything of the sort. And yet they paid us back amazingly, because when they came back, the amount of money that they could save in the operation and realign their forces. And I think, Vaman, you should explain how Tuscaloosa and Castamet, the two big units, how did you really take advantage of this, to Nabeel?
Yeah, when I told you, Nabilji, that we set up 41 new greenfields and brownfields plants over the last 5 year period. And a lot of these plants were in the middle of their ramp up. So you can imagine the plants are bursting at their seams. And we had, out of the 41, two had launch issues, which we had been quite vocal about since the start. Because of other macroeconomic issues of the geographical location that they were in, visas being issued, etc. But during this time, we got a breather. We really got a chance to train the people, realign our entire setup, bring in the improvements, upgrades, relook at our technology stacks, and do all of those kind of things, which are impossible to do when the plant is running 7 days a week, three shifts a day. Um, so that is like the silver lining that we see, that a lot of the time that we got to really breathe with the market, realign ourselves, bring in the necessary upgrades. And when the market came back, we have performed quite strongly. So really proud of the teams for sticking it out, and doing a great job and bringing everything back to where it should have been in the first place. And now, like I said, with everything stabilized, we're in a very, very good position.
So how do you see the 2021, recovery in terms of automobile industry? India and other market, you are continuously tracking all the markets. So what kind of a recovery you see in the key markets, especially in India also?
So, Nabeel, I think pre-COVID and after COVID, one particular fact is clearly established. Uh, the way people thought about shared vehicles and how they don't need a private vehicle and all that has changed dramatically. Globally, we can see a lot of footfalls into the dealerships. People are buying cars, scooters, motorcycles all across the globe. That's one huge differential that I see. Second thing is that a vehicle becomes some sort of your own private space of safety, if you understand what I'm trying to say, PPE as they call it or whatever. So I think that shift is going to remain. We don't know how the vaccines will behave, and then after COVID-19, whether it's going to be COVID-21, I don't know. That all we'll come to know what big boss up there wants to happen. But I think that whole mindset of the people has changed dramatically, and I think it's good. Uh, People are more concerned about their own personal safety. Never has there been such a example in the world where you can't see a thing and that's scary to kill you also, you know. So I think there is a big change that's coming. We believe that the automotive experience will continue for at least another year and a half, 2 years. And then after that, it has to be put to reason and to that time what happens over there. But I don't see this demand falling off for at least a year and a half, 2 years. And then after that, we'll see how it goes.
Great. You had huge operations in Mexico also, especially meant to
We
serve.
still do. We still do.
Now, see, things have changed in the US. New government, new president-elect is there. The policies are going to be different. Are you hopeful that the Mexico plants are going to do much better, or how is it going to change for you?
Well, I don't think Motherson is ever export oriented kind of a company, you know. So even our Mexican plants during the tenure of the present president, we did not suffer anything. We didn't close down any plant or anything of the sort. There is a thing known as macrodora, in which all the raw materials are ordered from USA, sent to Mexico for job working, and then brought back to US. So that was still allowed. It wasn't that it was put to stop or something like that. I think what is the biggest advantage for us is that in this particular last 5 year plan, Vaman and me and all of us could experience what it takes to set up a big plant in USA. So the whole growth of 11 to 36, three main countries are going to be our focus area. Uh, USA, Vaman will also tell you more about it. USA, Canada, the Americas, Mexico, but also Japan, Korea, and we think India because of the present government's PLI scheme and things like that. You know, so I think these three group of countries are going to be huge for giving you that growth of growing from 11 plus billion to about 36 billion. And Europe and all, of course, will chip in, but that's the basic area. So we are that much better off. Now we know exactly what happens when you want to set up a plant in US. What are the pitfalls? Where are we have to be careful? Blah blah blah. Every single thing is very well known to us. Vaman, of course, luckily is showing only black hair just now, but there are a lot of whites over there because he experienced the American
Okay.
Tuscaloosa plant. Go ahead, Vaman.
Yeah, look, again, Motherson procures locally, manufactures locally, and supplies locally. We don't do too much of import and export. So, we believe that the plants of the car makers globally will continue. We don't see a big shift from one region to another or something like that. And historically, we've stayed away from labor arbitrage and all those kind of things, which other companies are affected if jobs move from one place or the other. So, for example, in our plant in Mexico, if they're supplying to Audi, Audi produces those platforms globally from that location. So, if for example, a tax goes up in the US or something like that, they will export more to other countries. They'll export more to Asia or something like that. In that way, our plants will be able to supply, because we're not doing, like I said, dependent on labor arbitrage or import export or something like that. So that way, the policy that Papa made with the team, 3CX15, no country, no customer, no component should be more than 15% of our business, has really helped us to sustain any of these short-term macroeconomic challenges that you have, or any legislation issues that we really have. In this next 5 year period, we're really moving to 3CX10, so reducing that dependence from 15% to 10%. And also, we're extremely excited about this entire Make in India, which we have taken and also added a Make with Motherson. So Make in India, Make with Motherson. So we have a huge land bank in pretty much all parts of the automotive hubs in India. This especially large one is in Chennai, where we are promoting economic development supplier zone, not just for automotive, but pretty much for any contract manufacturing. and using strengths of Motherson again in engineering, manufacturing. We have the complete setup. We can just give the land. We can become a contract manufacturer. We can become a joint venture partner. We can become a technical assistance. Whatever the partner wants, really, to come into India, bring jobs into India, manufacture in India, we are able to support that. And likely that's what we have done globally as well. So we are very excited about these new schemes, and we think they'll also play a big part in our diversification in this next 5-year period, and also bring a lot of things to India, hopefully.
Thank you. I'll just come back to the PLI scheme, or my sources suggest they are going to call it Global Champion Scheme. That's the government is planning. But the larger thrust there, the cash back there, they are going to give from 2 to 12%, and in some case up to 4%. Largely, it is driven by exports. But you say that you want to be local, you want to produce locally. So how are you going to leverage this opportunity that will come probably from the Global Champion Scheme? The
Yeah.
PLI is part of this scheme only, that is the government is considering.
So, we are not averse to exports. We are not averse to exports. But what we do is, if one particular country is exporting a lot to another country, somewhere down the line, at some point of time, there is some kind of a pain that's available in that transaction. It could be foreign exchange pain. It could be, delivery pain. Logistics is going to become such a big part of the whole thing in the future. So I think the way we look at it is, we are already global champions. We are already, whatever we are doing, we're doing it. We are the largest auto company in India. We're now the 21st largest in the world. We have 39 joint ventures. Nabeel, that is something which you can understand how acceptable Motherson is as a joint venture partner. So obviously, when we are going to be setting up those particular things along with new joint venture partners, there is going to be some amount of exports that are going to happen to that particular guy, and let him be the global, wherever he wants it. We can start with that and then build up our own market in the future. So we are absolutely open, as Vaman said very rightly. We don't care, any which way. It's okay. We are willing to go, because at the end of the day, we are going into the agreement with the eyes and ears open. And as a trustworthy company, our partners, our future joint venture partners, will definitely want to buy back from us. So I think that would take care of the export side also. But more importantly, wherever it is that we have to export, we don't have a problem. We have been exporting and we will continue to export. But we don't like setting up one plant only for exports. That doesn't make sense. So the PLI scheme also, I'm sure, is about making in India, for India, and then outside. So I think that is a very logical way to grow up with that. And we are not going to try to disturb that particular scheme, but whatever the requirements will be as they come out more clearer, we'll follow that.
Does this scheme make a much lucrative option to invest in India? Do you think that with the
Yeah,
PLI scheme coming in?
I think people are giving it different names, and I'm saying is, at the end of the day, there are three things which are very important. One is the quality, two is the quantity, and three is the ability to deliver as per the requirements of the customer wherever it is. So all these three combination definitely exist in India. We have become that much more better and wiser, and that much more in sync with the world. Whether it is either we're taking away something from China or taking away something from Japan, Korea, I don't know. That depends upon how economically beneficial we are for the. And surely, if we get money back from the government of India, then definitely will become that much more cheaper. So I believe that there is a lot of scope there. But at the end of the day, it has to be a win-win-win.
We see a lot of buzz globally about electric vehicle. Motherson Sumi is not quite focused towards specific components required for electric vehicles. You have the generic one that is going to be used in electric vehicle or the ICE engine equally. But I just want to understand why Motherson Sumi doesn't want to get strongly into this space or do something specific to electric vehicle. Don't you think once the market matures in electric space, you will probably, your growth potential may suffer because of this?
No, I don't think so. But let me explain to you something which, if it makes sense to you, then I'm sure we've been able to explain it to you that much better. The
So
key
even for the
thing
viewers,
is,
our viewers also.
yeah, sure. That's why I'm going to try to put this particular point in context. See, from 2002 onwards, we have been acquiring companies on the behest of the customer. Now, Nabil, tell me something. In 18 years, no customer in the world has asked us to take over any product which is like what you say in the electric space or in the battery space or in something like that. There must be some logical reason for that. Now, because billions of dollars have gone into that and have multiple bankruptcies globally. Why nobody have ever asked us to take over a company in the electric space? Motherson, as Vaman said right in the beginning, we don't take bets. We don't take bets. And for me, choosing that, going in for electric or let's go for a hydrogen fuel, let's go for this, that's a bet. I'd rather leave it to the car maker. The car maker tells me, Chand, please take over this company. We'll start to work together. Vaman and me will, do all the khatai over there and we'll go and look at that thing and then come back. But there must be a reason why nobody has asked us. I mean, I find it very strange. I mean, everything people have asked us, but except electric engine or something like that. And that means there is ample amount of research and things that are happening over there. And the car makers are rather happy. So why should I go and play casino and say, no, I bet on the electric engine? I don't need to. And there are so many more parts that we have to make. So why not? I'm okay with that.
But are you really talking about casino? Because there are facts also that is showing a different view. If you look at a company like Tesla, which is hardly 10, 12 years in the operation, they are valued much more than the traditional giants who have been there for hundreds of years. So there is some change that is coming there, and that's coming very strongly and making noise in the industry. So
So
we're not
Nabeel, let me put it to you. Let me put it to you very plainly. What do you think is the total number of cars in the world today? On the road, there are about 1.4 billion cars. How many of them are electric?
very less
No,
percentage.
no, listen, no. So I'm saying, how many of them? So maybe less than a million, maybe 2 million at best. Total cars produced in the world about 87, 88 million every year. How many of them are in electric? Probably less than a million. So now you just do your maths and see if today you are going to convert everything into electric. Let's say tomorrow morning, dictate comes in the world and they said 88 million cars will be made electric. It is still going to take you at least 13 years to become 50-50. That's what I'm trying to tell you. The scale, a car is not a telephone. A car is a car, and you have to see the size of the elephant. So even if tomorrow, let's say the world stops making ICE engine, only electric cars, Nabil, it will still take you 12 years to become 50-50 because 1.4 billion cars are already there. And if you produce 1.4 billion cars in the next 12, 13 years, then you'll become 50-50. And then what are you going to do with that 1.4 billion ICE engines? So I'm just saying that I'm not a guy who looks into crystal balls
So,
to
so
try
for the
and figure
next
out what the future
5 year
is.
plan that you have,
I
does
can't see
electric
it.
vehicle feature anywhere in the focus? No.
I can't see it. At least that's what our team. We couldn't see it, and we don't want to be the emperor's new clothes or something like that. We are just saying we can't see it happening in the next 5 years. Maybe in 2024, 25, we will see it happening. Definitely, we will also move towards that. But our products are agnostic to the engine. So that is a key thing that we want to stay. And tomorrow, if a car maker tells me to take over electric particular what do you call paraphernalia, definitely we will. We won't hesitate.
And just to add to that, Papa, if you look at the top 6 or 7 electric models cars out there, we're supplying to all of them. So it's not that
Yeah, but not the engine.
no, we won't supply to electric or something like that. We
But
just think it will take some time for that shift to really happen.
Vaman, you have been part of all the turnaround, or you have led the turnaround the stories of Motherson Group, be it SMR or any acquisition that Motherson has made. What's your next game plan to take the Motherson Group to the new level? What would be your focus area? How different is it going to be when you further take the company to the next level?
No, thank you very much for giving me the credit. I think the credit is actually due to the entire teams who are in the front lines. I'm only there to take it in name. But we have a fantastic team. I think anywhere that you have really looked at where we have been successful, it's the group that has come together to support that company. And the group in the existing teams, they let go some of the key people to come handhold, turn around these companies, work together with this company, bring the local people up, and then let the local people run it. So all that Papa has told me to really do is to go there, work with the people, give them the confidence, give them the know that we are standing behind them, that we believe in them, we trust them, and make sure that we have the people that are there hand holding them and correcting them. So it's very much a team effort. It's very much the group that it's the if you say what is the success factor, I would say the group's ability to support each other, be there at the times of need, and really work through the problems and not run away is the key factor of success. And of course, the customer's confidence in us. They know we're going to difficult areas. We ask for their support, their hand holding our hands and taking us through these issues. And it's a team thing that really works that through. Moving forward as well, we envisage more greenfields, we envisage more takeovers, we envisage more companies that will have a lot of these supply issues. And I think we're geared up. We have a lot of learnings from the greenfield plants. We have a lot of learnings from SMR. We have a lot of learnings from SMP, and we're planning to use those into the new verticals that we are going to enter as well. So very excited about the journey. Yes, maybe I will have more white hair and perhaps lose some more hair, but it's going to be rewarding nonetheless for us as a team.
No, no, I see everything going great because you have the ability that has come out from the experiences that we see in case of SMR and others. I just want to understand from you how the succession or transition plan is shaping. Will there be any change in terms of promoters, share or equity? How do you see going forward from both of you? I just want to understand this.
No, from our side, it's very clear that of course Papa sets the vision. My job is to execute it with the team. There is no change in shareholding or anything like that. We're a very small family anyway between Papa and me, so there's no real change in that aspect.
Entire family share, do you want to increase your share, or you want to have same as you grow bigger, or you target bigger, or you will maintain certain threshold that you want to?
So Papa can also help me with this, but I think we don't look at it as if that we need to increase our family shareholding or something like that. I think we are our equity is there, has been there for long. We don't want to dilute it either, but there is no plan that we want to specifically increase our equity or something like that. Like I said, if there's a big acquisition that will require us not to take on too much debt and dilute some, we're open to that as well. Our focus is the company. Our focus is 36 billion, and we will do whatever fundraising is really required to really get there. And if we have to dilute a little bit, sure, we're open to it. Papa, what do you think?
Yeah, I think these kind of things we normally don't want to comment much on, Nabeel, for the simple reason that our record is there for the past 45 years what we have done. we have always diluted so that we have been able to share our wealth with everybody, be it the shareholders, be it the employees, be it collaborators, whatever. I don't think there is any company which we own 100%, which is there. We have from ownership of 100%, we brought the Japanese in, brought it down to 74%, brought it down to 50%, then brought it down to 30%. Now, with the new restructuring, the company that we owned almost 90% will come down to less than just about 51% or something like that. So I think this is something that we feel very strongly about, and that is that we have to wait and see how the flow of the whole thing goes. We are not everything is to be owned by us or anything like that. So we will continue to follow this particular way by which we can share our wealth. Nabeel, think about it. From 1993, when we started our Motherson Sumi Systems public listed journey, we were $2 million when we listed in 1993. Okay, now that's a public document. So $2 million we were. Now we are sitting at about 12 million. With the same this thing, every year we have grown 35% on the top line. And every year we have returned to the shareholders, 32% of our profit have been paid out. So, the return to the shareholder, 32%, top line return, 35%. Every year, we have never missed a year for the last 27 years. Including 2008-9, including 1920, our dividends are the highest, so that there'll be cash available with all the shareholders. And we, at that time, we are only 30% of the owner. 70% has been paid out, whether to our collaborators or to shareholders or whoever. So I think we have a very clear this thing in our mind that shareholders are very important people in our company. They must also be looked after. The employees are very important. They should be looked after. The customers, our suppliers, all of them have to be looked after. And then, of course, the government agencies, the banks, the tax, everything and all that. So, it's a all-around composite growth that Motherson has delivered in the last 27 years of our public history. So I am not grab all and let me consume everything to myself or something. Vaman and me have enough. But that's the way we want to be, and in the future also it will go the same way. So we have not increased our shares anywhere. We have only decreased.
So one last question before we wind up, and that brings to me the same question that I asked earlier. To achieve that $36 billion in the next 5 years, what is your estimated investment probably that you would require to make? That's a very important question. I want to understand.
From a capex perspective, we are making about 2,000 crores of investment. That's what we did last year. We will give the numbers for next year as well. But a lot of our greenfield plants have already stabilized, have grown, so that number should taper down. As we will do acquisitions, as we will do more greenfields, we will come back to the market and disclose those numbers. It's a changing number. It's not a fixed number that we have in our mind. It will depend on the opportunity. So give us some time, maybe around the March time when we're coming up solidifying the new budgets, we would have a better idea, at least for next month.
After next month, I see some of the news coming that you said. I just want to understand what kind of mix it is going to be. Is it going to be largely the big companies, or how
at the moment it is going to be more the small and medium till December, I think. Jan-Feb, you will start to see the medium and the large companies.
So in December also we'll see some acquisition?
Let's hope. We are working very hard on it.
Okay.
We are working very hard on it.
So that's the biggest news for the day. Thank you so much for joining ETAuto. It was great pleasure talking to you. Thank you so much, Vaman. Thank you so much, Mr. Saigal, for joining in today.
Thank you. Thank you so much, Nabeel.
Thank you, Ji.
And stay safe and healthy. And all the viewers, stay safe and healthy. God bless.
Thank you so much, sir.